is module number 5. If you look at your executive summary, you'll note that this module is going to deal with federal and state employee regulations. The first topic here deals with understanding employee legislation and regulation, and may help us to look at some background in relation to these issues. If you remember, when we talked about laws in general and contracts, we differentiated between common law and statutory law by taking a look at the history that resulted in the tradition of law in our country today. In the same way, it's perhaps helpful to take a look at the history of, for want of a better word, I like to call them worker bees. If we look at Western civilization and look at the, quote, worker bee, we see that there were really 3 stages that worker bees went through, and the first was slavery. A slave worker bee essentially was owned property. After the fall of the Roman Empire and the bringing forth of the Middle Ages, the economics changed, and what occurred was a feudal system. And of course, we looked at that feudal system as it applied to the common law. But as it applies to an employee, or these worker bees that we speak of, there was a new type of worker bee that was called the serf. And we spoke of how the measure of a serf's wealth was the height of the dung pile on the side of his hut. It might also interest you to know that their proper greeting to someone of a higher social status was to bow down and stick out their tongue. But that aside, the worker bee in the case of the serf transformed from the slave. And the primary difference was that the serf was not owned property. The serf could freely come and go as they pleased. There were limitations in a practical sense, but the fact of the matter is a major transformation occurred when these worker bees went from a condition of slavery to a condition of the fact that they were not owned property. Well, as things have evolved forward into our current civilization, the worker bee situation has once again changed. And now the distinction between the worker bee of today and the serf of yesteryear is essentially that the worker bee of today has rights. And if you were to take a look at all of the legislation written about employee regulations over in our century, there's a tremendous amount of information, but the common denominator is that we're talking about the exploration of the rights of these worker bees, of employees. And if we look at Chapter 5 in your Contractor's Manual, we're going to be taking a look at some of the laws. I think it's helpful to see that what we're really exploring here are the rights of these individuals. A second feature here is, how do you go about reading these regulations? You're certainly not going to want to read word for word all of this stuff. And so I suggest that you take a look at every regulation from 3 perspectives. The first one being, who does this apply to, and what exactly is it about? And often that is stated up front. The second thing is, what are the reporting deadlines or requirements of this sort of thing? What are we supposed to do? And the final thing is, what happens if we don't do it? That's topic number B3. And as we go through these laws, and as you look at them, if you would kind of keep those questions in mind, it'll help you to isolate and focus as you read through these. And remember, you don't want to read word for word. You want to scan and look for key ideas. When you find the ideas, then you kind of want to zero in. Topic Roman numeral 1, 2. The relationship between federal and state regulations. Essentially, the law is seen as a mighty river. It all flows in one direction. If there were a discrepancy between a state and a federal regulation, it would first be evaluated in terms of whether or not they were consistent with each other. In other words, you can't have the fish fighting each other or trying to swim upstream. You could not have a federal regulation that said you could do something and then a state regulation that said you couldn't do it. So the first thing they're going to look at is the consistency of the regulations. The second thing they're going to look at is the strictness, and usually the more strict will govern. So, for example, later on we're going to take a look at the Fair Standard Labor Act, and we're going to look at child labor laws within that act, and we're going to see that there are federal child labor laws and state child labor laws, and the state child labor laws are a bit more restrictive. For example, federal child laws say that if a person is 18, they can work on a construction site as long as they're not involved in a particularly hazardous occupation on that site, whereas the Florida laws say that no, if you are 18, you are not allowed to work in a construction site, only if you're over 18. And so there's some subtle distinctions between them. You have to sometimes pick up these fine lines of distinction between the laws, but in general, the more restrictive covenant will carry. Now, if you open up your Contractor's Manual to Chapter 5, we're going to look at some of the primary regulations here. Now, you realize the test can ask you anything about any of these laws, but there are so many of them, it would just be burdensome to go through each and every one. So we're going to focus on some of them. But if you look at the table of contents first, you'll get an idea of what laws they're referring to. At first, they're talking about the Labor Management Relations Act. This is not one that tends to be focused on very much in the exam. It has to do with large-scale union negotiations. The second topic is one that is on your outline, and that's the Florida Right to Work laws. And essentially, there are some exemptions. There are no exemptions to this, the Florida Right to Work. It says that in Florida, employees are allowed to work, and you cannot create a situation where a union is required as membership, as a precondition for employees. And if you were to jump to where it tells you in your contractor's manual, in my book, it's on page 5-14, where they discuss these Florida Right to Work laws, they indicate that there are several types of arrangements that are not allowed, and in particular, a union shop, an agency shop, and a maintenance of membership are three arrangements that are not allowed under the Florida Right to Work laws. The next topic, both in your outline, back on the table, in your outline and also on the table of contents, is the Fair Labor Standards Act. And you'll notice how many items are listed here on your table of contents. You'll also notice at the end of this chapter, there is actually the Fair Labor Standards Act law itself. And so you can well imagine that the test is going to focus a great deal on this law. And so we're going to spend a little time going through it. And again, I'm going to go through the outline and identify the significant items that are in the outline. And what's necessary for you to do is, after you're done listening to this and you feel comfortable with the concepts, you go back through your manual and you mark the specific references that I have indicated and that are indicated in your outline. And you'll have a pretty good idea what's going on. It should be pretty easy for you to find the information you need for the exam. But take a look at your outline, topic 3B, the Fair Labor Standards Act. The first item that's listed here are exemptions. And what you've got to understand is that the phrase non-exempt means that the act applies to the person. And there are many individuals that this act does not apply to. In fact, most of the people that you've met that are on salary, this act does not apply to. However, in your study of the act, you'll find that there are individuals that are on salary that are non-exempt, which means the act applies to them. And although you've probably never met any of these people, they do exist for purposes of the exam, and you'll have to understand the distinction. Essentially, if a person is in a management position, which means that they can make decisions, in particular the hiring and firing of individuals, then they're going to be exempt from this law. This law is dealing with individuals that are not seen as part of the management team, that are in a sense these worker bees that we spoke of before. The next item, which is often asked about with some detail on the exam, is the basic area of the Fair Labor Standards Act, which is the issue of overtime. Now, overtime is the idea that, number one, each week is going to stand alone, but when you tally the hours up for a week, when you go more than 40 hours in a week, and by the way, a week does not have to be Monday to Monday, it can be any 7-day period of time as long as you use it as a standard within your company and you set up everything along these lines. But every 7-day period of time stands alone, and if a person works more than 40 hours and is non-exempt, which means the law applies to them, then they're entitled to overtime. And the basic formula or the basic idea of overtime is that you get your regular rate times 40, and you get time and a half your regular rate for any of the overtime hours that you placed. However, the idea of regular rate is often a little bit more intricate. How do you determine a person's regular rate of pay? Well, if you think in terms of an hourly laborer, that's self-explanatory because their hourly wage is their regular rate. But if you were thinking in terms of someone else, how would you determine their hourly rate? Now, the good news is that in the manual, you have an example of every different calculation that's possible for the exam. So they're actually going to take you through each of these possibilities and show you examples. And also you'll notice that there are several different ways of expressing this idea of overtime. The way that I find most useful is regular rate times 40 and time and a half the regular rate for any overtime. However, you'll notice that in the boxes in the book where they do these math calculations in your manual, the way they like to do it is regular rate times all the hours that are worked and then half the regular rate for the overtime. And that's how they express their math. But if you think about it for a little and compare the two, you're going to find them identical. So the way I'm going to speak of it is regular rate times 40 and time and a half the regular rate for any overtime. If you look at your outline under B2 overtime requirements and then C, you'll see various ways that we can calculate this regular rate. The first one we already described, the hourly rate is the regular rate. The second one is, what if there's a bonus involved? In this case, you take the total compensation, that is to say, if it's an hourly rate or what have you, you figure out what they earn, and then you figure out the bonus, and you add it all together. So you take their total compensation, and you divide it by the total number of hours that the person worked, and that will give you the regular rate. And then they get that regular rate times 40 and time and a half that regular rate for any overtime. Number 3 is a day laborer. Here's somebody that you say, hey, I'll pay you $40 a day for your labor. And it's okay if they work 10 hours in the day, 12 hours in the day, but once they go past 40 hours, then the overtime law kicks in. And in their case, you take the total promise of compensation and divide it by the total number of hours that they worked in the week, the total promise of compensation. In other words, if you promised the person $40 a day, and they wound up working 50 hours in 1 week, then you would take the amount of days that they actually worked within that week, and you'd multiply them by 40, because that's what you promised the guy. That would be the total amount of money that was promised. However, the formula is you then divide it by the total number of hours they actually worked. So if they actually worked 50 hours in the week, you would take what you promised them and divide it by 50. Now, of course, if this amount, the answer that you get, is lower than the minimum wage, you can't do that. You have to raise it up to the minimum wage. So there could be the extra step of taking the total amount of money that was promised, dividing it by the total number of hours that were actually worked, and then you might have to round up to the minimum wage. Then they're going to get that regular rate times 40 and time and a half the regular rate for any overtime. And by the way, from a point of view of reality here, in these areas, in the area of day laborers, and then later on when we talk about a piecework individual, there's often a lot of confusion here. You have to realize that the Florida Fair Labor Standards Act does not recognize the idea of a piece worker, nor do they really recognize the idea of a day laborer or any other type of an arrangement that would interfere with the idea that if a person works more than 40 hours in a week, then they get overtime. So although they will use the phrase piece worker, they're essentially looking for hours for these individuals. You need to keep time cards on these people. Now, we're not talking about a bona fide subcontractor, that is a licensed subcontractor that you are assigning a portion of the task for an exchange in dollars. We're talking about somebody who is your employee that you are now going to pay on a basis other than an hourly basis, which will appear to not involve time. You still have to keep time cards on these individuals. If you don't, you run the risk later on of being challenged, and you won't have any documentation to show the hours that these individuals actually worked. The fourth circumstance here on your outline is a salaried individual, and they call this particular person a salaried, fixed. What they mean by this is that when the person was hired, they were hired to do a particular task, and it was assumed that they were going to spend a certain specific number of hours. For example, a bookkeeper who's hired and given a salary, but the salary is based on a 30-hour-a-week performance. In this case, to find their regular rate, you take their salary and you divide it by the number of hours that were originally agreed upon when you hired the individual. So that bookkeeper we spoke of, who was hired on the basis of 30 hours a week, if that individual works 50 hours in a week, then you take their salary and divide it by 30. That gives you their regular rate. And then you multiply that times 40, and then anything that was the overtime, the 10 hours overtime, they get their regular rate times 1.5 times that 10 hours of overtime. Now, this may seem a little awkward or odd, even though they're only supposed to work 30 hours in a week. The state is not concerned, or the federal government is concerned with that period of time between 30 and 40 hours. This law only kicks in when they go over 40 hours in a week. Now, number 5 is a salaried individual who was hired on a different basis. This individual, again, someone you've never met, is hired on the basis of, look, we don't care how many hours a week you work, you just get the job done. So that bookkeeper we spoke of a minute ago would be hired this way. Look, you've got to keep the books. If it takes you 2 hours in a week, fine, do your 2 hours and go home. If it takes you 30 hours a week, fine, stay for 30 hours and do the books. In that type of an arrangement, if that person, again, who's non-exempt, somebody you've never met, exceeds 40 hours in a work week, the overtime laws kick in. But in that case, the formula for the regular rate changes, because in that case, you take the salary they were promised and divide it by the total number of hours that they worked in the week in question. So salary divided by total number of hours. In the other case, the fixed salary, you took the salary and divided it by the number of hours that were originally agreed upon. But now in this case, you take the salary and divide it by the total number of hours. Now again, you have to be alert, because if this winds up lower than the minimum wage, you have to raise it up. But then they're going to get that times 40 and time and a half that for any overtime. Number 6 is the piecework individual, and here you take the total promise of compensation, whatever it includes, the piecework, any bonuses, whatever it is, and divide it by the total number of hours they actually worked. Again, being on guard to make sure you wind up over the minimum wage, otherwise you have to round up. And in that case, that's how you find the regular rate. Number 7 is periods other than a week. You convert their salary to a week and you divide by 40. Now what you need to do is get familiar with these different methodologies. There is an example of how to do it in the book, and very often the test will take almost word for word a question from the book and give it to you on the exam, and you just need to find your way back here, recognize the distinction between the ways to calculate the regular rate, find the right example, and come up with the right answer. Now, topic number 3, still dealing in this general subject of overtime and the Fair Labor Standards Act, there are some monies that do count towards an overtime calculation and some that do not. For example, remember before I said sometimes you take the total amount of money that was promised and you divide it by some hours. Well, that money that was promised, that's what we're talking about here. There are certain types of monies that are not added up and counted in the overtime calculation. And one example of the same kind of money but looked at 2 different ways is topic A, which are bonuses. And there are 2 types of bonuses that are viewed here: discretionary and non-discretionary. A discretionary bonus is one that you give out of the goodness of your heart. So it's Christmas time and you decide to give a Christmas bonus, or Hanukkah time, you give a Hanukkah bonus, or what have you. And the point here is that that type of bonus is not added into their wages or salary to come up with an overtime figure, because it wasn't anything that they were promised in the course of employment. However, A2, non-discretionary bonuses, well, these do count. In other words, when you hired the person, you told them that they were going to get a certain type of bonus. Therefore, it is part of their employment package, and therefore that type of money is included in the overtime calculation. There are also other types of excluded payments that are listed in your reference manual, and in your outline under topic 3B, excluded payments, you'll find them there. Number C are idle hours, and these do not count towards this overtime calculation. What do I mean by idle hours? Well, let's say you have a group of people coming to work, and let's make it easy and say they're on an hourly basis. But perhaps weather conditions are not appropriate for them to work. So you decide out of, again, the kindness of your heart, rather than send them home, you allow them to hang around to see if the weather is going to clear up. And you agree to pay them for this time that they're hanging around. Well, later on down the road, if they go into overtime in that week, those hours that you paid them when they essentially did not work are considered idle hours, and they do not count in calculating the overtime. Show-up and callback pay are also excluded. An individual who's on call may or may not be, depending upon the circumstances. And this is one that doesn't really relate to common sense, but because you probably think about it the other way around. But if you've got a person on call, meaning that they've got a beeper, and if they're called, they have to go do something. If they're at their home or they're going about their normal business, that actually is not considered to be employee time. But if they're on call and they have to be at a physical location to answer a phone or something like this, that is considered to be overtime or regular hours. That is considered to be employable hours. Item number F, deductions and fixed sum for variable overtime. These are also items that you may need to look carefully at if you're asked about them on the exam, and recognize that they're classified a certain way. The fourth topic here, Roman numeral 1, topic 4, are record-keeping requirements under this act. And you'll notice that hard records need to be kept for 3 years and soft records need to be kept for 2 years. If you think about it a little bit, there are other record-keeping requirements. For example, the IRS, we're supposed to keep our tax returns for 3 years. However, employee records are supposed to be kept for 4 years. And if you think about it a little more, it relates back to the licensing law, 489, that tells us that as contractors, we have to keep our records for 3 years. So there's, of course, different reporting requirements for different laws and acts, and this is the FSLA. Okay, the next topic in your outline, number 5, deals with child labor restrictions. And we already noted earlier that there is a distinction between federal law and Florida law here. In the federal laws, under 16, you're not allowed to work in construction. In Florida, and 18, you're not allowed to work in a hazardous area, although you're allowed to work in construction. But in Florida, you have to be over 18 to work in construction at all. And if you'll notice topic 5C, there are a series of formulas in the contractor's manual about how to deal with younger people that are working. In my book, it starts on page 5-36 and 5-37. Your edition may be different, but if you look for the child labor restrictions, you'll find that there are a series of requirements. In my book on 535, it indicates that in Florida, minors 17 or under may not work more than 6 consecutive days in 1 week, 30 hours in a week, or 8 hours in any one workday, or before 6:30 or after 11 p.m. And this goes on, again, differentiating on the next page for minors who are 14 and 15. They list 3 items. No more than 3 hours on a school day, no more than 8 hours on a non-school day, and 40 hours in a non-school week. No earlier than 7, no later than 7, except for June through Labor Day, where they can work until 9 p.m. And then there are requirements for individuals that are 15 and older, and they list them here 1 through 4. And you'll also notice at the bottom of the page that there are enforcements and penalties here that can be up to $10,000 for violations of these child labor laws and labor restrictions. The next topic in your outline goes back to the table of contents in the chapter 5 of your manual. So flip back to the table of contents and you'll look at 5-4 is the page number in my book, where most of that page is showing you the different things we've just discussed about the Fair Labor Standards Act. And at the very bottom of the page, we see the Davis-Bacon Act, and then below that, the Title VII of the Civil Rights Act. Well, Davis-Bacon we've spoken about earlier. This is a federal law. It's a federal requirement for federal jobs or jobs being built with federal money. It essentially requires that you do 3 things. First, you classify everybody in your organization. No gray areas allowed. Secondly, you pay these individuals based on the federal wage standards given from the regional level in this area. Atlanta is a regional area office. And then finally, as we submit applications for payments on these jobs, we have to give full documentation, including timesheets and showing the wage rates that were paid these individuals. The next topic in your outline is Title VII of the Civil Rights Act. You're fairly familiar with this act already. No reason to go into more detail. In your outline, however, you'll notice that we're dealing with topic E, which is age discrimination, and that is on the next page in your table of contents, and it basically indicates that we cannot discriminate against an individual once they reach a particular age. If you look at page 543, which is the page in my book, we'll take a look at what this is, and it notices that under requirements and prohibitions, they're talking about individuals that are 40 years of age and older, and basically we cannot discriminate against such individuals. Flipping back both to the table of contents and also